I'm not fully with you on that. I understand it. Like everything is all the best intentions going, like just, you know, not succeeding at first. But I can see the logical steps that they've taken. And until you and I can invent a better roadmap, you know, like maybe at the end we put you or I in charge of the Fed, and what's the one thing that we're going to do that no one else is doing? Because we'll probably struggle on that. So, but I want to say that there's been no real vibrancy in the Japanese economy for the best part of 3 decades, which has brought forward another change or an extension or rethinking of policy. That's all we can do. If you at first you don't succeed, you know, try, think again, and that's where we are in this process.
Yeah, my problem with all of that is always they don't think outside the box. I always just do the same thing. That's why they're on QE number 28. It's just, hey, let's just do one more thing again. But I agree with you. Look, I mean, economists and central bankers and officials, they are trying to do what they think is their best, because this is what the economics textbook tells them they need to do. And they are right in a certain extent, is that, you know, the lack of vibrancy is the key problem. I mean, they called it the deflationary mindset. The deflationary mindset was enemy number one at the Bank of Japan for decades after decade. And it's the same thing too outside of Japan as well. I mean, that's what the Chinese are going through right now. A deflationary mindset that has gripped China. And I do want to get your thoughts on China here in just a second. But at some point, you know, I take the populist view. At some point, you got to say, okay, enough is enough here. This shit doesn't work. We need to at least start thinking more radically. And so to bring this back to our earlier discussion, as a portfolio manager, you start seeing some of these big signals. Is it maybe not the market thinking governments are thinking radically, but maybe more so outside the government is starting to think? We're seeing more radical types of potential out there. And that's why, you know, the Nikkei is soaring like this. Is that AI? No, maybe AI emboldens the Japanese economy somehow, and it leads to some vibrancy there. Is that what the stock market signal is? Or are we really just inventing narratives?
I mean, for sure, ex ante, like before it happens, we are inventing. My advice to people is that's what you're meant to do.
Yeah.
Don't find the answer, invent answers and find one you're comfortable with and that sits well with the price pattern. But I'm saying I think the Nikkei goes to 200,000.
You sound like Michael Saylor.
Yeah. I think Bitcoin goes to 1 million. I think silver goes to 200. I think gold saw its peak. I may be wrong on that. Okay. Now, why Japan 200,000? Because for 30 years, you have a bit like Camus and his guy pushing the boulder, right? Japan has pushed this every day, pushed this gigantic cash boulder up the hill. It's like, I'm ignoring, you can buy your textbooks, you can buy, I've got my cash, and every day it rolls down a little bit. Bugger, I'm rolling it, I'm pushing it back up, I'm pushing it back up. Okay. And almost, if you will, the more it pushes, the more it's helped. It's like a snowball, so it's got big as you're going up that arc of despair, that depression thinking culture. The mass has steadily become gigantic. Okay, and I'm saying to you that I don't know if they've worked it out and it's explicit or otherwise, but it's almost as if they've said, we're going to cut it and the currency will allow us to look reckless, and this big ball is going to swing the other way again. And that takes you to 200,000. Now, in swinging animal spirits, you are seriously losing out if you're a Japanese resident and you're not invested in the Nikkei. It's painful. Nothing else is moving. And then the opportunity, you've already gone down. You've taken a hit on cash. Cash should never take a hit. You're losing money. That is the Bank of Japan being incredibly reckless. Cash is becoming risky. And if cash becomes risky, it's like, I was going to use bad words there, but stock market and 200,000 stock markets. And again, I want to thank you, because I record these nuggets of things that you say, and you said something which stands with me, and I think it's appropriate here. A 10-year bond yield, and let's say I'm playing with your word, but a 10-year bond yield of 10 basis points is not a badge of fortitude, or it's not a symbol of greatness. It's very much a signal of weakness that you've lost. That actually JGBs yielding 10-year yielding 4 or 5%, because the natural rate of profitability we take on, we adopt, the Swedish economist's notion of these natural rates of interest, natural rates of profit, and they're actually very, very aligned. Like your natural rate of interest rate in an economy gravitates to where the profit line is. So if the natural profit level is low, then your rates are going to be very low. So I want to say to you, I can actually see this world where the Nikkei is considerably stronger and the JGB yield is 4 or 5%. And it's 4 or 5% because that enormous ball has then created domestic demand, real positive domestic demand. And then plus on top of that, the overseas sector is destroying it. And I think Japan, by hook or by crook, actually has a latency to a lot of the bottlenecks that have to be solved in the world that we're going to. So I find that, you have American clients, you can sit there, there's do you know that there's an exchange ETF fund and it's the Nikkei, but you buy it in yen terms.
Yeah, it's
that
currency protected. Yeah.
Currency protected. You want currency protected. So again, so invent realities. If you're watching this, you're looking for shut up, guys, and just giving me actionable. Silver broke 50s, come all the way back to 50. I would have risk there. Nikkei is what, 65 or 67,000. You know what? It could come all the way down to about 55 like silver has. But you want to ask me where it's going to be in 5 years' time? I think it's going to be close to 200,000. And I don't want to own that stock market and then lose all my money on the currency because I think the dollar is going to strengthen to 200. And if it does 200, easy it does 250. So the more that it loses 162 presently, the more I'd be buying these out of the money, like 250s for nothing. So again, we're giving you actionable, we're not advising. I mean, I'm sitting in a gym, I'm drinking an iced latte. I mean, ask Steve from Disney parks or whatever.
These are monkey brain ideas and nothing more than monkey brain ideas.